channel. I'm Doris. I'm here to show you about my market update. Many major banks in China have lowered the interest rate on the US dollar deposit, which is not suitable for high-yield exchange. Recently, following the successive cut in the RMB deposit rate by commercial banks, major domestic banks such as Bank of China have lowered the US deposit rates. Many market analysts believe that rising interest rates in the US have made the interest rates related to various dollar deposit products around the world to rise. However, as the Fed rate hike cycle draws to a close, the strength of the dollar is difficult to sustain, and the interest rate rise in the dollar deposit rate in China can be revised down. According to the Monetary Policy Implementation Report, the weighted average interest rate for domestic one-year US dollar large deposit was 5.67%, up 4.15% from year-on-year. During the same time, the weighted average interest rate of domestic one-year US dollar loans was 5.34%, an increase 3.74 percentage point year-on-year. Chief economist of CITIC Securities clearly pointed out that the Fed continues to raise interest rates sharply under the background of high inflation in the US, and the tightening of dollar liquidity has also led to higher interest rate of US deposits in China. Specifically because the economy is resilient, inflation is still sticky above the expectations, and the Fed's hawkish speeches have to a correction in the market interest rate cut expectations. Fed's June interest rate meeting kept the interest rate unchanged, but the dot plot of the end of interest rate hikes increased to 5.5% to 5.75% at the end of the year, indicating that the Fed officials believe that 2 more basis point interest rate hikes this year. Wen Bing, chief economist of China Minsheng Bank, told First Finance and Economics that under the current situation where Fed's expectations of continued interest rate hikes has cooled, the major banks have appropriately lowered the domestic dollar deposit interest rate, which is conducive to maintaining the competition order of the domestic dollar deposit market, rationalizing the domestic dollar interest rate pricing mechanism, alleviating the problems of inversion. The inversion of US dollar deposit and loan of interest rates of commercial banks, which also increased the motivation for commercial banks to reduce the dollar deposit interest rates. Since June, the commercial banks have started a new round of interest rate cuts. Wen Bing said that appropriate reduction of the domestic dollar deposit interest rate also led to a certain degree of synergy with the decline in the RMB deposit interest rates, which is also conducive in reducing the dollar deposit demand of domestic enterprise residents. Is of positive significance for maintaining the basic stability of the RMB exchange rate at a reasonable and balanced level. It is clearly believed that participating US dollar deposits are mainly facing exchange risk, and in recent years the flexibility of the RMB exchange rate has increased, and the interest rate fluctuations may offset the gains brought by the deposit interest margins. At the present, exchange rate of the US dollar against the RMB is at a relatively high historical level, mainly affected by factors such as phase of rising dollar index. Based on this, Wen Bing suggested that financial institutions should also adhere to the concept of risk neutrality when carrying the US dollar deposit business to customers, and guide customers to manage the US dollar positions based on real needs. If you unilaterally induce customers to retain foreign exchange or exchange deposits on the ground of high interest rate in the US dollars, without detailing the exchange rates and risk involved, it is likely to mislead customers. For savers, the strategy of earning high returns on U.S. dollar deposits is not suitable. Savers should establish a risk-neutral concept and reasonably manage their dollar positions according to their actual needs, obviously said. He also said, at the present, it may not be appropriate to simply earn a high interest rate return on U.S. dollar deposits, even though the gain will outweigh the losses. That's all I have for today. Thank you for listening. Don't forget to subscribe. See you next episode.